Well, AI is the biggest catalyst for all innovation.
Where do you think we are right now in the valuation cycle for companies that touch either right now or are promising to in the future what AI is able to deliver?
It's interesting. We think every company has the opportunity to capitalize on artificial intelligence. It is probably going to produce the most dramatic productivity gains in history. And anyone who's used ChatGPT to help write emails or papers or so forth has a sense of what we mean now. We've been talking about AI for the last 10 years. We invested in NVIDIA when it was $5. So we've been expecting this promise to be realized. Now that we have something like ChatGPT, more and more people understand it, which is fantastic because companies know that if they do not harness AI, they're going to lose out competitively. So we're seeing, you might say, an arms race with NVIDIA. That's the hardware side of it. There will be a software side of it. Palantir is a good example on the software side. So is UiPath. But if you think about it, any company with proprietary data that takes AI seriously and has deep domain expertise on whatever the business is should be able to use AI and drive productivity gains up dramatically. And what's interesting about that is with productivity comes wealth creation. And so we think productivity will increase for knowledge workers by fourfold, maybe more than fourfold by the end of this decade. Can you imagine doing 4 times more than you are doing right now by the end of the decade in a day's work, or maybe even saving time doing it? So the changes are going to be pretty profound. Many people say, oh, are we in a bubble like in the late 90s? I was there, and we are not. We are not. Why? Because the technologies are ready and the costs are low enough. AI training costs are dropping 75% per year. And so the AI opportunity is going to be delivered across sectors, across industries, across sub-industries as costs come down. But if we're right and the unemployment rate goes up and companies are concerned about their margins, they're probably going to pull back on some of the excesses associated with GPUs, and they'll focus more on cost cutting within their organization. So it's just a trade-off around a cycle, but we do not believe that this bubble is going to so some people are calling that, is going to end in a crash like the late 90s, early 2000s at all. This AI movement is powerful, it's real, it's unstoppable, and we are very excited about it.
There's a difference, Cathie, between the macro enthusiasm for AI and, as you've described it, its ability to touch every industry, particularly those that are data rich. But your newsletter, which I waved at the beginning, does point to a cautionary tale. I'm just going to read a piece of it. You say Cisco Systems, ticker CSCO, offers a good history lesson. I remember well the stock's behavior at a similar technology moment in time. And you talk about Cisco stock going up 31-fold, split adjusted, quote, as its routers, switches, and other equipment dominated the build out of the internet backbone globally. The capital markets began to fund competitors, even those with systems inferior to Cisco's. Let's talk about NVIDIA with that history lesson in mind, Cathie. What do you think is going to happen in the chip, in the semiconductor competitive landscape? You've got Sam Altman, going to raise, trillions of dollars aspirationally, or maybe. Is this beginning to happen? Are we seeing a Cisco story starting to emerge?
Yes, somewhat. I think that AMD is certainly coming along. It's still well behind NVIDIA. But what I don't think many people realize is all of the hyperscalers, so Meta Platforms, Amazon, Google, Microsoft, they're all developing their own chips. And interestingly, large companies with big opportunities like Tesla. Tesla has developed its own AI chip, taking a leaf from Apple's book. You may not remember this, but I remember when Nokia, Motorola, and Ericsson and BlackBerry controlled the cell phone market. Apple came along and designed its own chip for a smartphone. It was the only company to do that, and it redefined that market, a computer in the pocket. We think Tesla is the largest AI project in the world, and that it is going to redefine transportation from human-driven to autonomous. And that's what its AI chip is all about. So there are a lot of competitors. Some of them are very special purpose, like Tesla. Others, less so, like the other ones I mentioned. So yes, there is going to be competition, and that will be a good thing. One of the things that NVIDIA had going for it, and it executed brilliantly, is it developed essentially frameworks. It accommodated all of the software frameworks out there. Well, AI itself now can help translate from one software code to another very easily. So that competitive advantage is starting to diminish as well.
And when that time comes, Cathie, when the Fed starts to cut rates, what do you think happens to the tech stocks we have seen on an absolute rip-roaring tear so far this 2024?
So last year, the market began to get a sense that the Fed was getting close to the end of raising rates, and it stopped in July 23rd. So we had a nice rally at the beginning of the year, a little setback during the summer, and then at the end of the year, as interest rates peaked and started coming down, meaning the bond market began to see the Fed having to cut rates. Then we had another big swoosh. So the market has been discounting lower interest rates, but we don't think that it has been discounting the amount of interest rate cutting that we will see ahead. So we believe that the companies that were, or the stocks that were hurt the most by rising interest rates, ours would be in that category, of course. Any long duration asset, even long-term bonds, were killed as the Fed was pushing rates up so dramatically. The other side of that is that the long duration assets are kinds of stocks in the innovation space. Long-term bonds should be prime beneficiaries of interest rates coming down.